Have you ever wondered why some people seem to make all the right investment moves while others struggle, even in the same market conditions? What if I told you that 2025 is shaping up to be one of the trickiest years for investors in a long time, but that there's a way to turn these challenges into opportunities? The secret lies in understanding one powerful force that controls the flow of money: interest rates. Warren Buffett, the world's most successful investor, has spent decades mastering how to navigate different economic cycles. And today, we're going to dive into his strategy for handling high interest rates in 2025. For years, the Federal Reserve kept rates close to zero, making borrowing cheap and pushing stock prices to record highs. But now, things have changed. Interest rates have shot up to levels we haven't seen in decades, and that has completely shifted the investing landscape. Think of it like this. Imagine you're shopping for a car. If interest rates are low, you can get a loan with almost no extra cost. So, you might decide to go for a fancy new luxury model. But if interest rates are sky high, that same car suddenly becomes way more expensive to finance, and you might think twice before signing the deal. The same thing happens in the stock market. When borrowing money is expensive, businesses struggle to expand and investors start looking for safer places to park their cash. This is why the rules of investing in 2025 are different from what they were just a couple of years ago. The easy money era is over, and it's time to play smarter. 2. The Buffett approach. Why he's betting on bonds. So what is Warren Buffett doing about all of this? Unlike many investors who panic when things change, Buffett sees opportunities where others see obstacles. And right now, he's making a move that surprises a lot of people. He's shifting billions of dollars into short-term treasury bonds instead of buying more stocks. This might sound boring at first, but it's actually a genius strategy. Treasury bonds are one of the safest investments around. When interest rates go up, their returns become much more attractive compared to the stock market. Buffett knows that in times of uncertainty, playing it safe and waiting for the right moment is just as important as taking big risks. To put it simply, he's saying, why fight the tide? If interest rates are making it harder to find great stock deals, let's park our cash somewhere safe and earn a steady return until better opportunities come along. And that's exactly what he's doing. Buffett has been trimming his stock holdings, even selling a portion of his massive Apple investment, and using that money to build a stronger cash position. He's not rushing into overvalued stocks. He's patiently waiting for the perfect moment to strike. And that's a lesson every investor can learn from. 3. What this means for you: a smarter way to invest. Now, you might be wondering, what should I do with my money? You don't need billions of dollars to take advantage of Buffett's strategy. The same principles apply to everyday investors. If you've been feeling stuck, unsure whether to buy stocks, or worried about the market, here's the good news: you don't need to rush. This is actually a great time to rethink your approach. Instead of chasing high-risk stocks, consider looking at safer investments like bonds. With interest rates at higher levels, you can earn solid, risk-free returns while you wait for better stock market opportunities. If you do invest in stocks, make sure you're choosing companies that are truly worth the price. Many businesses are still overpriced despite the tougher economic conditions. Buffett isn't buying just anything. He's waiting for the right price. The key to long-term investing success is patience. The market is constantly shifting, and those who stay calm and think strategically will be the ones who come out on top. And here's the best part: times like these create some of the best investment opportunities. The market might be uncertain right now, but history shows that the biggest winners are the ones who position themselves wisely before the next big move. So, are you ready to think like Buffett and make smarter investment decisions? The next part of this discussion is even more exciting. Why the stock market is still soaring despite high interest rates, and why this could be your biggest opportunity or your biggest mistake. Stay with me, because what we uncover next might completely change the way you see investing in 2025. In Part 1, we talked about how Warren Buffett is navigating the high interest rate environment by shifting his focus to safer investments like treasury bonds. But here's something strange. Despite these tougher conditions, the stock market is still hitting record highs. Now, let me ask you this. If borrowing is more expensive, businesses are struggling to grow, and investors are moving their money into safer assets, then why are stocks still going up? More importantly, is this an opportunity or a ticking time bomb? Let's dive into this mystery and, more importantly, what Warren Buffett is doing about it. The stock market's big disconnect. Why prices are still sky high. Imagine this. You walk into a store and see your favorite sneakers selling for twice their normal price. Would you still buy them, or would you wait for a sale? Right now, that's exactly what's happening in the stock market. Stocks, especially in big tech companies like Apple, Amazon, and Nvidia, are trading at extremely high prices, even though the economic conditions suggest they should be struggling. Investors keep buying, pushing prices higher and higher. But here's the problem. Just like overpriced sneakers, expensive stocks don't always justify their price tags. Buffett has been watching this unfold for years. He knows that when stocks get too expensive, they eventually come crashing down. And in 2025, that's exactly the risk many investors are ignoring. Buffett's warning. Why he's not buying right now. So, if stocks are rising, why isn't Buffett jumping in? It's simple. He doesn't like paying too much for something that isn't worth it. Buffett believes in buying only when a stock is truly a good deal, meaning the company's profits, future potential, and market value all make sense. But right now, most of the market is trading at overinflated prices, especially the so-called Magnificent Seven stocks. Apple, Microsoft, Amazon, Tesla, Google, Meta, Nvidia. These companies have seen their prices soar because of the AI boom. But Buffett isn't convinced they're worth what people are paying. In fact, instead of buying more stocks, he's holding on to cash and waiting for the right moment. He has said multiple times that he's struggling to find good deals right now. And if Buffett, one of the greatest investors of all time, can't find good deals, that should tell us something. 6. What this means for you. How to avoid overpaying for stocks. This is where things get interesting. If you're an investor, you might be feeling stuck. Should you keep buying, or should you wait? Here's the reality. Just because the market is going up doesn't mean every stock is a good investment. The key lesson from Buffett is to be patient and disciplined. Don't chase overpriced stocks just because they're going up. A rising stock price doesn't always mean a company is doing well. It could just be investor hype. Look for businesses that are actually worth their price. Buffett waits for what he calls fat pitches, investments that are so obviously a great deal that they're almost impossible to pass up. Consider looking beyond the U.S. market. Buffett himself made a major investment in Japanese trading companies a few years ago because they were much cheaper compared to American stocks. If big investors are looking overseas, maybe There's something we should learn from that. 7. The big takeaway. Why waiting can be your best move. A lot of people think that to be a successful investor, you always have to be doing something. Buying, selling, trading. But Buffett proves that sometimes the best move is to do nothing at all. Instead of forcing investments, he's building up cash, waiting for the moment when stocks become a bargain. It's a lesson in patience, and it's something every investor should remember. So, what's next? The answer might surprise you. Many investors aren't just overpaying for stocks. They're also falling into the biggest trap in investing: speculation. And in Part 3, we'll talk about why this is more dangerous than ever in 2025, and how Buffett avoids it. Stay with me, because understanding this could save you from making the biggest investing mistake of your life. Now, it's time to talk about the biggest trap that investors are falling into in 2025: speculation. Let me ask you this. Have you ever seen a stock skyrocket overnight and thought, "Wow, I need to get in before I miss out"? That feeling, that urge to jump in, is called FOMO, fear of missing out. And right now, it's driving millions of investors to make some very risky decisions. But here's what Warren Buffett wants you to know. The stock market isn't a casino. If you treat it like one, sooner or later, you'll lose everything. 8. The speculation boom. Why everyone's gambling on stocks. Right now, speculation is everywhere. In 2024, stocks surged not because of strong business performance, but because of hype and excitement. AI stocks exploded. Bitcoin doubled. Meme stocks made a comeback. And new investors poured into the market, convinced they could get rich overnight. But here's the problem. What goes up fast can come down even faster. Buffett has seen this story play out before, many times. Whether it was the dot-com bubble in 2000, the financial crisis in 2008, or the meme stock craze of 2021, history has shown that when people start buying stocks based on hype rather than real value, the crash is inevitable. The stock market can seem like a magic money machine until reality hits, and by the time it does, it's usually too late for most people to get out. 9. Buffett's strategy. How to avoid the speculation trap. So, if speculation is everywhere, how does Buffett avoid getting caught up in it? The answer is surprisingly simple. He only invests in businesses, not stock prices. Most investors look at stock prices first. If a stock is rising, they assume the company is doing well. But Buffett does the opposite. He looks at the actual business behind the stock and asks himself, is this company truly profitable? Does it have a strong future? Is the stock price reasonable compared to what the business is actually worth? If the answers don't add up, he doesn't buy, no matter how much hype there is. It's like shopping for a car. Imagine someone tries to sell you a used car for double its normal price, claiming that everyone's buying it right now. Would you fall for it? Probably not. You'd check the condition of the car, compare prices, and make sure it's actually worth the money. Stocks work the same way. Just because something is popular doesn't mean it's a good deal. The 10th, the secret to long-term investing. Success, the real challenge in 2025 isn't just avoiding bad investments. It's training yourself to think long-term, even when everyone else is chasing quick profits. Buffett's secret to success isn't complicated. He follows one simple rule. Let the market serve you, not control you. If stocks are overvalued, he waits. If opportunities are scarce, he holds cash. If investors are making reckless decisions, he stays disciplined. And here's the best part. The more people speculate, the more opportunities they create for patient, smart investors. Buffett knows that markets always go through cycles. Right now, stocks are expensive, and speculation is at an all-time high. But when the bubble bursts, and it always does, there will be a chance to buy great companies at bargain prices. And that's why Buffett isn't worried. He knows that the biggest opportunities come when everyone else is panicking. 11. The big takeaway. What should you do now? So, what's the lesson in all of this? How can you invest wisely in 2025 while avoiding the biggest traps? Here's what Buffett would tell you. Don't follow the crowd. Just because a stock is trending doesn't mean it's a good investment. Be patient. The best investment opportunities don't come around every day. Sometimes, the smartest move is to do nothing at all. Look at the actual business, not just the stock price. If a company isn't profitable and doesn't have a strong future, it's not worth your money. Prepare for opportunities. The market will eventually shift. When it does, you want to be ready with cash in hand to buy great businesses at low prices. 12th, final thought. Why? This is a once-in-a-lifetime opportunity. 2025 might feel like a tough year for investors, but here's the truth. It's actually a golden opportunity. When markets are unpredictable, that's when the biggest fortunes are made. Buffett became one of the richest people in the world, not by chasing the hype, but by staying calm when everyone else was panicking. So, here's the big question for you. Will you follow the crowd, or will you take control of your financial future? The choice is yours. And if you're ready to start investing like Buffett, now is the time to learn. Stay patient, stay smart, and when the right opportunity comes, be ready to act.